So let's talk about Macy's. For what feels like forever, the story with Macy's has been all about just trying to survive, right? Well, their latest earnings report just flipped that script completely. It looks like their big, bold new chapter strategy isn't just a bunch of buzzwords on a PowerPoint slide. It's actually starting to work. So let's dig in and see what's going on.
And boom, this is why everyone is paying attention. The stock jumped over 20% in a single day. I mean, come on, the market didn't just like the news, it absolutely loved it. This was a massive relief rally, basically Wall Street screaming that they're finally seeing real, tangible proof that a turnaround is underway. So what numbers got them so excited? Let's take a look.
All right, so let's get into the Q2 numbers. What was in this report that got everyone so fired up?
Okay, first up, the bottom line. Adjusted earnings per share, or EPS, came in at 41 cents. Now, to give you some context, Wall Street analysts were only hoping for 19 cents. So Macy's didn't just beat the estimate, they blew it out of the water. We're talking more than double. That right there points to some serious discipline on the operational side.
All right, now let's talk about momentum. Comparable sales, that's a key metric, grew by 1.9%. Now you might be thinking, 1.9%, is that a big deal? Oh, it's a huge deal. Why? Because it's the first time they've seen positive growth in 3 years. Think about that. After 12 straight quarters of going backwards, this isn't just another number. This could be the sign of a real trend reversal.
So if we zoom out a bit, you'll see a really interesting story of, well, strategic shrinking. Yeah, you'll see here that net sales were actually down 2.5%, but, and this is the key, that was on purpose. It was almost entirely because they closed over 60 stores that just weren't pulling their weight. At the same time, they got a handle on their expenses, cutting costs by $29 million. And you know what? Even with a small dip in their gross margin, it was still way better than what investors were bracing for.
Okay, so these numbers are great, but they didn't just appear out of thin air. They're all part of Macy's big turnaround plan, the one they're calling their bold new chapter. Let's get into what that strategy actually looks like. So the whole plan really comes down to three main things. First, they're focused on strengthening the main Macy's brand, kind of giving it a refresh. Second, they're pouring gas on their luxury brands, Bloomingdales and Bluemercury, to make them stand out even more. And third, they're modernizing the whole behind-the-scenes operation to make everything run smoother and more efficiently.
And you know, it looks like real customers are actually noticing the difference. On the earnings call, the CEO even shared a note they got from a shopper. It said, and I'm quoting here, "The store was clean and organized, the employees were a joy, the service has improved tremendously." I mean, you can't get much better feedback than that. It's a great sign that their focus on the in-store experience is really paying off.
And it's not just feel-good stories. There's hard data to back this up. They've got this initiative called Reimagine 125, where they're pouring money into upgrading their top 125 stores. And guess what? It's working. These revamped stores saw positive comp growth of 1.4% and beat out all the other stores on pretty much every important metric. We're talking more foot traffic, people spending more per visit, and higher customer satisfaction scores.
Now, let's talk about that luxury piece of the strategy, because it is absolutely on fire. Bloomingdale's put up a massive 5.7% comparable sales gain. That's its fourth quarter of growth in a row. And get this, it's happening while other parts of the luxury world are actually struggling. So Bloomingdale's isn't just growing, it's stealing market share and becoming a real powerhouse for Macy's.
Okay, so everything sounds amazing, right? Well, not so fast. Management was actually pretty quick to tap the brakes during the call, so let's talk about their guidance and some of the headwinds they see coming.
So, the number one challenge on their radar? Tariffs. Management basically said the hit to their gross margin from tariffs is going to be worse than they originally thought. They're now expecting a 40 to 60 basis point impact for the full year, up from their earlier estimate. So that pressure is very real, and they're expecting to feel it the most in the fourth quarter.
And this is where it gets really interesting. Even with that big tariff cloud hanging over them, they actually raised their full-year guidance for both sales and profits. But at the same time, they kept talking about how the consumer's being really choiceful, picky, and that the overall economy is unpredictable. So you've got this weird mix of confidence and caution, which really left the market with a big question mark.
So with this mixed message from management, how did investors react? Well, they pretty much ignored the caution and went all in on the good news.
You can see it so clearly in the options market. On earnings day, traders snapped up 90,000 call contracts. Those are basically bets that the stock is going to go up. Compare that to only 47,000 puts, which are bets it'll go down. That's a super bullish signal. The trading community was clearly betting on more upside.
So at the end of the day, it's like the market heard management's warnings, nodded, and then just focused on the cold, hard facts. You had positive growth for the first time in 3 years. You had that huge earnings beat. You had clear proof that the new store formats are working. For investors, that tangible evidence right now was just way more powerful than any warnings about what might happen down the road.
All right, that brings us to the big question. After all this, what's our call on Macy's stock? Let's wrap this up and put a rating on it.
So the stock has already had this huge run-up, and the strategy seems to be turning a corner. What's the call from here? Is it too late to get in?
Look, the bull case here is pretty strong. That return to positive growth, that's the validation everyone was waiting for. Their luxury business is a star player that's winning. And financially, they're on solid ground. Their balance sheet is clean, with no major debt coming due for years. This whole shrink to get stronger idea is really working. So for all those reasons, here at Talk Tickers, we believe Macy's is set to outperform. And of course, just a reminder, this analysis is for informational purposes only. It is not financial advice.